10-year note yields end the week back below 485. Recall earlier in the week we saw yields get north of 5% for the first time in almost 16 years. But the reversal lower came despite higher GDP and higher PCE data as looming weekend event risks continue to rise. Not only was it seen in treasuries where yields were lower, but it was also seen in gold, which traded north of 2,000 for the first time since May. So weekend event risks kind of take center stage, and again, pushing 10-year note yields lower, closing back below 485. Now, what does this mean for volatility? Well, check out that CVol index over at cmegroup.com. And while volatility did trade near unchanged today as yields were in decline, it did close lower on the week. Typically, we see volatility moving directionally with yields. So as yields move lower, typically volatility would move lower, but again, held near unchanged on the session as we look ahead to the weekend. Lastly, let's talk about what we have next week. It's a full calendar of data coming out. Not only do we get the PMI data, we get ADP on Wednesday, we get the Fed meeting on Wednesday, and then we get non-farm payrolls. So it's a lot squeezed in to just 1 week. And not only do we get the Fed, we also get the Bank of Japan and the Bank of England. So a number of central banks meeting, including our Fed, as well as jobs highlighting next week's data. So ending a very busy week, seeing a range of 483 up to 5%, but closing the week near the low end of that spectrum ahead of next week's jobs, PMIs, and FOMC.